traders are off to a hectic week. We have Joe Tigay with us now. And Joe, how bad is it?
Yeah, the sell-off continues. Some critical supports have been taken out. The year-to-date low, we talked about last week when the Fed came out, and we thought it reasonable that the market might just be poised to take its medicine and have a sell-off. This has been, since this 2008 Great Recession, there's been a sustained effort by the Fed to keep equity markets higher. And they've had the luxury of low interest rates, or low inflation, to be able to keep the interest rates low. Right now, we do not have that same luxury. So the Fed can't be there to prop up the asset markets this time.
Joe, how do you make money in the stock market when it's plunging? Because there are people who will make money on these moves.
Well, it's important to not forget the plan you had when you stepped out. At some point, the market does stop going on. It does pay to be diversified. It does pay to have different asset classes out there. Sure, you don't have to be an active trader where you're short all the time, because that's very risky and requires market timing. You can just have a long-term plan, and part of that plan is to reallocate. When stocks get cheaper, you can allocate some cash. You can move money from some bonds into some equities when they are cheaper. All that said, I think, unfortunately, there could be some more downside in equities, as prior to the sell-off, equity prices were comparatively very high on a PE ratio. And if they do come back to normal levels on a normal PE ratio, there could be a lot more downside to come.
I'm imagining some people are watching the market action and thinking, I have to get out.
If you're there for the short term, if you're thinking you got to get out, if you're up late at night, then you probably have the wrong plan to begin with. You probably didn't have the risk right when you put it on. If you did think it through, if you have a long enough time horizon, the market has these corrections frequently. So getting out now in the midst of correction is wrong. The best way to do it is to have the right plan, be trimming when the market's higher and adding when the market's pulling back, like we see right now.
Excellent advice, Joe. Thank you.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.